This program was brought to you by Organo Gold. Organo Gold is a health and wellness company that provides healthy coffees, teas, and chocolate. All one has to do is consume the available coffee, teas, chocolate, and other products to get all the available benefits. One can also share these products with others to help them improve their health as well.
And now, Fairfax Breakfast Club with your host, Basile Lemba.
Hello, my name is Basile Lemba and I will be your host. The Fairfax Breakfast Club is a weekly program in which we bring to you valuable and workable know-how you can use to improve your networking skills and grow your business. We always start the show with a quote, and today's quote is, "Financial literacy is an issue that should command our attention because many Americans are not adequately organizing finances for their education, healthcare, and retirement." And that is from Ron Lewis. With us in the studios today, we have someone who deals with a key part of that personal finance, and that is the mortgage and its ramifications. So I introduce to you Fred from Corridor Mortgage. Hello, Fred.
Basile, how you doing?
Good, how about you?
Wonderful.
Okay, good. So now, tell us finances in relation to mortgage. Or mortgage relation to finances, whichever.
I guess they go hand in hand.
Okay.
For finances, you're probably are referring to a person's household finances in terms of how well they're able to maintain a budget and make certain they're able to pay their bills on time. That has a direct correlation in terms of their ability to qualify for a mortgage. If a person is unable to pay their bills on time, that will have a direct effect in bringing down their credit scores. And by having a low credit score, you would not be able to qualify for a mortgage. So if a person is able to pay their bills on time, then they would definitely have a good opportunity of getting approved for a mortgage. Okay. So they go hand in hand.
Very good. But also find a mortgage, because mortgage is the biggest purchase for most people in their lifetime.
It is. And your question is?
How do you get, because I do know, this is what I know, that there are courses out there or educational seminars where they get mainly, anybody could use it for that matter, first-time home buyers to go to.
Yes.
To learn a fixed credit and this, that, the other thing. Can you tell us about that, or tell us a bit about it?
You're talking about various types of first-time home buyer classes.
Yes.
And even myself, we actually put on some of these classes. In many cases, a first-time home buyer class will give an individual a lot of the basic information in terms of what is associated with the whole process of meeting with a lender and then working with a realtor to be able to go out and find a house and then ultimately go to closing where they're actually able to obtain the ownership of that house. And so in some of those courses, we spend a lot of time talking about your credit. And we also spend a lot of time talking about budgeting to make certain that you are able to, one, to get approved for a mortgage, and most importantly, after you go to closing and you're the owner of the house, to make certain that you're able to stay in the house. We know, back in the financial meltdown, a lot of people were able to get approved for a mortgage, but they were not able to keep it. So right now, a lot of attention is being directed on making certain that you understand that once you own a house, that you don't immediately go out and start buying all of these household goods that may enable you to have a lot of nice items in the house, but then with those monthly payments, you're not actually able to keep them. Thereby, you may be in a worse situation when you own a house compared to when you are renting.
I didn't quite get that. Give that to me again. You buy a house and you go and buy all these items.
Yes.
On credit, is that what it's concerned?
Yes.
And now when you lose the house, so you have the mortgage to pay, you also have the different items that you bought on credit. Is that the issue?
Yes. And then what happens is people overextend themselves. That is one of the things that is spent more right now to make certain that you're able to maintain the house and not overextend.
Oh, because
yourself.
they had one debt to begin with, that was the house.
Oh my goodness!
And
yes.
following that, they add some others.
Yes.
So now they have 3 or 4 times as much as they had, and they just now put themselves in a very tight position.
Yeah, and we know when life happens, your car may break down, and then if you had children, you have all these expenses. Then when it's time for your children to graduate from high school, you have a college expense. So all of these different expenses will come apparent, and you want to make certain that you're able to afford them without actually going into default on your mortgage, because the other expenses are now taking up too much of your monthly income.
Gotcha. Okay. Now, tell us about credit. There are mysterious things called credit.
Credit. Credit. Whenever I...
Is there a few guys sitting in the back office deciding what your credit is?
Oh, yeah. One of the things that I share in my first-time home buyers class, I was explaining to them, credit is a necessary evil. That's what it is. So much of our lives now is dependent on credit. Even when you apply for any type of a loan, your credit is going to be very important, but also your insurance is based on credit as well. And in many cases, your employment, depending upon the type of job that you may apply for, they're going to pull a credit report. And you depend upon what they see in your on that report, it may hinder you from actually being employed by that company. So credit is extremely important, and credit really is an overall picture of your ability to repay debt or obligations where some money was lent to you. That actually is credit. And so in this country, credit is extremely important because it's difficult to stay in this country without actually having some type of credit.
You know, the key word in what you just said is discount rate. That's the key word.
The discount rate?
Discount rate in the United States, discount in the United States, because that's not the case worldwide.
Correct. And in many countries outside of the United States, they don't have any knowledge of what credit is. Everything is paid in cash.
Well, it's not just the knowledge. I have my own take on it, and I agree with you. It's a necessary evil. Evil not being a good thing, because I, for example, live worldwide. I live in Africa, I live in Europe. When I hit the United States, I was shocked because I thought I have good credit. Why? Because I had no debt.
Okay.
But as it is in the United States, if you have no debt, then you have a bad credit.
Well,
or have no credit, which either way you penalize, yet you did not fail to meet your financial obligation.
yeah, that's a very good statement. And a lot of people think that if you have no credit, then you may pay a premium. If I had a choice of working with someone with less than perfect credit compared to someone that has no credit, it's easier to get a person approved with no credit. The reason why is when you have less than perfect credit, there is nothing you can do to offset your previous payment history. If you have no credit, you're able to use alternative sources of credit, which would be similar to a cell phone bill, internet, cable, insurance, and rent. Those are alternative sources of credit, and we're able to get a history on those items. Even though you may not have no established credit with a lender, we can utilize those in place of established credit, and then you would still be able to qualify for a mortgage. So alternative sources of credit are still very useful.
Okay. My take on that is make a lot of money and you don't care about credit.
Well, believe it
if you can, or if you want to, I seriously, I think that, I'm not kidding, because that's my road. Because when I got here, coming from Europe, allow me to give a personal example. Coming from Europe, I never had a credit, so it didn't make sense to me. It seems to me again, this is personal opinion, we have to put you on debt first. And then we decide if your credit worth it.
Yeah.
That's how I look at it. And I don't agree with it personally. That's my personal opinion. Let's put you in debt first, see how you do, whatever that means. And then we decide if you're good or not. Because this is my take. Again, my take is, actually, when it comes to credit, personal take, the person characters will be much more valuable, much more important to estimate his credit than the payment.
And what we look at it is some way the opposite. We look at if you are able to pay your bills on time and have good credit, then we can make the presumption that your character is somewhat good. Let me give you my example. Mm-hmm. When I was a freshman in college, a number of years ago, I went to the campus bookstore to buy my books. I had a checkbook, so I pulled it out and I wrote a check for my books. I was surprised that the cashier gave me a bookmarker and put it in the books that I was purchasing. And I looked at it and I was like, what is this? The bookmarkers that she gave me to put inside my books were credit card applications. And I asked myself, how in the world can I get approved for a credit card application when I'm a college student? I don't have any income coming in on a regular basis to enable me to pay for a credit card. Lo and behold, I was wrong. It was a well-known practice that individuals in college were able to get credit cards even though they didn't have a job. And what was so amazing, I won't really drop names of large banks, but if you went to a large bank and was able to get a credit card and then were unable to make those payments on time, even though they gave it to you knowing you were a college student, and then after you graduated and your credit was not that perfect and you went to the same bank to apply for a mortgage, you would have been turned down, even though that large bank gave you a credit card with you having no job.
I know it has been, this is not an isolated incident, it has been worldwide. I mean, I'm not even opposed to that, but the whole thing just has, to me, a taste of a trap in a sense, in some way, and I think that it is known and thought about. There's something off in it, in the sense that you're right. If we say that today you want to buy a house, they say, well, so what is your credit? Okay, well, why do they give a credit card then to somebody who they know well does not have a job to begin with? So it is kind of like lure them into the credit or into the financials. A lot of people today, when they come out of university, say nothing about their own debts of the school they have to pay for, but the credit is messed up because 18 years old, what does he know about it? He swapped it, it can buy pretty much anything.
And that's why it's so important to have a good knowledge and understanding. And we started out talking about finances. A lot of the schools now, the high school students are having to take courses on managing their finances because studies have found that when you graduate from high school and enter into college, even enter into the workforce, if you don't have a good solid foundation of understanding how to manage your credit, how to write a check, how to pay bills, then you have a greater likelihood of not being successful with managing your finances. So it is critical. And the sooner an individual has learned those basic skills, the better off that individual is going to be as they get older.
I think it brings it back down to the family. Family needs to take responsibility of teaching their kids about finances.
Yes.
And telling them what to watch for, what to pay attention for, because when they go out there, it's kind of like a trap situation. It's like throwing, hey, you can afford this, what have you, but nobody told them what are the repercussions, the consequences of using that and how far it goes and what would that affect them. One of those things sitting on your credit will sit there for a good 7 years. You get on the back, but guess what? They make you pay for it for 7 years. Somebody's making money on you because that purchase or because you failed to do that. If you want to go that way, if that lady who was sleeping this thing there, she failed to take the responsibility of teaching you what that was and the consequences of it.
And I'll use my own personal example. I have 3 children. One's in college and 2 are in elementary school. All 3 of them, even my youngest, they have their own savings account. And a lot of times when we go somewhere, if we need cash, the first thing that they'll say is, Daddy, just go to the machine and get some money. This has enabled us to have a teaching moment where we can explain to them that, granted, you see Mom and Daddy go into a machine and receive cash, or we go to a store and we pull out a credit card, but we have shared with them that all that money has to be repaid back. And so with them having a savings account, they understand what it means to save, because in some instances they're required to pay for those items from their own funds. And then right now they're starting to learn the difference of being able to shop and to be able to save and understand what is the value of a dollar. So of course, the sooner you can teach those skills to your children, the better off they're going to end up being.
This probably could be extended to the school system, because we're getting big right now, which makes sense. Education is getting somebody in a situation where they can solve the problems.
Yes.
If that's the case, then educational programs should include handling of finances. Now, when they go to school, learning the 3R, read, write, and the other one is
Arithmetic.
Arithmetic, yes. And then following that will be finances, how to handle. It should be parts and parcel of the education. Because why? That's what they individually up against in life. Finances have just too much big value and importance and impact over people's life that is not being taught at school. Checking, credit, interest rate, and everything else is a huge miss. They insist on geography, they insist on history, they insist on literature. That's fine, I don't have a problem with that. But one should insist also on finances. It costs them way much not knowing about it than not knowing geography or history or what have you.
And we agree, and that's why here in Fairfax County, that is a requirement where they must take courses in finance and in personal finances. I don't know the exact name of the course, but they're required to actually take courses in personal finances. So that is being done.
And that being said, I'll say the answer is to make more money.
Well,
a lot of money. That's how this society is built. I mean, if they teach them the R, get this, arithmetic, so they can check that they are not being shortchanged by the cashier. They should teach them the R, so they can make a whole lot more money.
When I first started working in the mortgage industry, one of my first clients, he was an insurance salesperson. And we were meeting, and he shared with me his income. And he said, Fred, I don't make a lot of money, but I spend my money wisely. He admitted, I saw the income, he didn't make much money, but he was able to support he and his wife. His wife did not work. His wife was an artist, but he was able to spend his money in such a manner that he maintained a comfortable lifestyle. So in many cases, it's not how much money you make, it's how well you spend it. That is the key. The majority
of the key.
Yeah. I would say, from what I've seen, one of the biggest reasons why people are unable to qualify for a mortgage is not based on how much money they make.
Okay.
They make plenty of money, but they spend too much.
Gotcha.
So if we can find a way to explain to everyone that you don't need everything that you see on TV, you don't need the latest and greatest cars, the most expensive, but just to have reliable transportation, you don't need all the designer clothes, but you need these clothes that fit well. Then if their spending comes down, then that means they're doing what? They're saving. As they're saving more, they're managing their money, enabling them to have a more comfortable lifestyle and be able to afford a mortgage.
So you're saying that keeping up with the Joneses is the issue?
As I'm saying, there's too many people that want to be the Joneses, but they're not able to keep up with them.
They're not catching up. Is that what I'm hearing?
No. We need less Joneses. We need much less Joneses.
Okay, very good. All right. So now let's change subject a little bit here. You have been attending regularly the breakfast event.
Yes.
Tell us your experience about the breakfast event.
Wow. We have, I was coming here, I was trying to, I don't know how many years that we have, that I've been attending your breakfast meetings. It's been a number of years, and I would share with a lot of persons there that my experience with your monthly meetings has been quite extraordinary. You may have forgotten, but one day we were having lunch, and you shared something with me I've never forgotten. You shared with me, you said, Fred, where is it where you can go on a monthly basis and have the opportunity to meet 25 or 30 business owners every month? I have never forgotten that. And each month, that is true. I have the ability to meet 25 to 30 new businesses. And now that number has increased, sometimes between 30 to 50.
Yeah.
And so that is still the case, where I'm able to meet constantly new people. Some of my relationships that I have now have resulted in me first meeting them during your breakfast meeting. So my experience has been good, and so I followed that up by becoming a benefactor.
That's correct.
So so I will continue to go, and I continue to meet new individuals. And we all know about networking. People have the misunderstanding of thinking that with networking, you should expect to receive something immediate. In many cases, it may take years down the road. But the one aspect that I've recently been paying more close attention to is not so much what you're doing at the present. For me, it's your business contacts that I have found more beneficial. And that has helped me grow and be able to acquire additional business by not so much what that person does, but by his contacts and who he's able to introduce me to. That has been, a major blessing.
Okay. Yeah, it reminds me of what we talk about at times at the Breakfast Club, which is look at the forest, not the tree.
Trees, yeah.
Because the person may or may not need mortgage, but they each, as we know, each one knows at least 3,000 people. And these 3,000 people, there are people there who need mortgage. And there are people there who could look upon them to recommend somebody.
And that's what with networking, it's a win-win for each person. As you're talking to someone, I'm always trying to find a way what I might be able to provide you that can help your business grow and help you to be a better person. Because if I'm doing that, then when you know someone that is going to need assistance with understanding credit, that may have a need for a mortgage, the first person that you're going to think of is going to be the person that helps you out with your business to help you grow. So it's a win-win.
Absolutely. We have 50% of the attendees first-timers at our event. And now it's average between 40 and 50. That is a wealth.
And if you recall, it wasn't so many years ago where we may have had half of that.
I mean, this is the last when we celebrated the 10th anniversary last in June, and it flipped totally when we read close to that, it changed into a whole new level.
Yeah.
And that's true. It is not only that, it's not just a matter of having 20 to 40 people, new people. You get the opportunity to talk to them on one-on-one.
Yes.
So the rubber, those meet the road right then and there.
And your format has changed, where before there would be one single line all the way across, and now you have staggered the chairs to allow a little more privacy. So all of that has helped as well.
Yeah.
You still walk around with your cowbell, so
don't say that part. Not in public.
So yeah, it is definitely quite a lively experience, to say the least.
Okay, very good. Yeah, definitely. Yeah, we started to share. That's good. It's part of the feedback that we got from one of the guests. By the way, it was a bright idea. So allow them to more, again, reinforce where the rubber meet the road, so they can understand and talk with one another.
Very good, yeah.
Yeah, definitely. Okay, so what last advice, Fred, we're about to close the show here. What is that you would like to recommend? What message would you like to give to the audience here? Leave with the audience.
One of the items that I stress to all of my clients, to any potential person that's interested in wanting to buy a house, whether it's now or 6 months to a year down the road, I recommend talking with a mortgage professional as soon as possible. The benefit is that individual will have the opportunity to understand what are your lifestyle your choices are, actually able to see how much income you're earning, and look at your credit and tell you, one, if you are eligible for loan approval, and if not, provide you with a plan where 6 months, a year down the road, you will then be able to qualify for a mortgage.
Okay.
To me, that's the best piece of advice that I have ever heard, is to start as soon as possible. In most cases, there is no fee, but the information that you've been able to acquire from that initial meeting will help you out so much more that you'll be so glad that you started the process as soon as possible.
Okay. Well, thank you very much. That's what I want this show to be, a show where we discuss real life issues.
Yes.
Real matter. Not a canned show. It's a show where we talk, okay? We talk about the real situation people run into and the way to solve them. Finance is important, and it takes education, it takes planning.
Yes.
To deal with it, come on top of it. And whatever your finances are, as he suggested, look into that. And also feel free to meet any financial advisors to take a look at your finances, know the right way than mortgage, see what the situation is. Because they say you fail only when you fail to plan.
Yeah.
So the finances today and tomorrow is based on the education you have and the planning that you put in place and execute. I cannot stress that the finances traps people's life, bring them down, wrap them around, and it can flip your life this way or the other. Something needs to be done about it.
But the beauty of it, it's not permanent. It can always be corrected.
Absolutely.
It can be corrected, so yeah.
Yes. So that's good. Well, thank you very much for coming on the show.
Basile, it's always a pleasure. I look forward to continue seeing you on a monthly basis. And you have had a number of years of success, and I look forward to seeing you each month. So thank you so much.
You're very welcome. Okay, folks, that's what we have for you. And as always, have a very productive day. Bye-bye.
This program was brought to you by Organo Gold. Organo Gold is a health and wellness company that provides healthy coffees, teas, and chocolate. All one has to do is consume the available coffee, teas, chocolate, and other products to get all the available benefits. One can also share these products with others to help them improve their health as well.